Every now and then, a chart reaches a level where the market has to make a decision, and Fetch AI is exactly at that point right now. The candles are slowing down, volatility is tightening, and the chart is preparing for its next major move. The question is simple but important. Does it hold the support and push upward, or does it lose momentum and fall toward the next weak zone? This is Shah, and let's break down Fetch AI step by step so you understand what the chart is telling us. Fetch.ai is currently trading around $0.28, and when we look at the daily time frame, the bigger picture is clearly bearish. The market has been consistently forming lower lows and lower highs, showing that sellers are still dominating the higher time frames. But even in a strong downtrend, there are levels where the market pauses, reacts, or even reverses. And Fetch AI is sitting very close to one of those areas. To understand this better, we move to the 4-hour time frame. Here the structure is still influenced by the larger downtrend, but the key levels are much clearer. The major support sites at $0.26. This is the level price is holding for now, and as long as Fetch AI stays above $0.26, there is a room for the market to push upward and attempt a recovery. On the upside, the nearest meaningful resistance is at $0.41. That level has acted as a barrier before and represents the previous major rejection point. So the range between $0.26 and $0.41 becomes the important zone for the 4-hour structure. If Fetch AI continues to respect the support at $0.26, the direction remains upward and buyers can slowly build momentum toward the resistance. This is especially important because downtrends often break only after the market forms a base, squeezes liquidity, and then pushes upward with strength. Holding support is always the first requirement, but here is the critical part. If Fetch AI loses the support at $0.26, the chart opens up a much bigger drop. Below this level, the next support sits all the way down at $0.20, and this support is weak compared to the current one. It has not been tested many times, and charts usually move very quickly when they drop into such zones. Once the market falls below $0.26, momentum can shift aggressively to the downside. So the entire short-term outlook depends on one thing. Does Fetch AI hold the support at $0.26 or not? If it holds, the market maintains a bullish bias on the lower time frame, and we can expect a move toward the resistance at $0.41. If it fails, then the chart continues its higher time frame downtrend and slides towards $0.20, which is the final weak support. Right now, patience is the key. The market is sitting at a decision point. A stable hold above $0.26 opens the path upward. A breakdown sends it towards $0.20. Understanding this difference is what separates emotional traders from disciplined ones. That is the full breakdown for Fetch AI.